get into the stock market analysis, projections, and the important information is, how how we present our analysis and what it means, and how you would, adopt our analysis into your own trading. One of the key things we always talk about is trade ownership. No matter what we say or no matter what anybody says, you're not going to be successful if you don't own that trade. You have to make your own decisions on when to get in, and don't wait for anybody to tell you when to get out. It reaches the exit levels, whether it's a win or a loss, you have to then really think about your own actions, and it has nothing to do with anybody but you. You want to be successful, own your trades. All right, one more thing before I get into the analysis. Matt did a great job showing you extensively what's on our level 4 special. Please do go to the top of our website where it says level 4 special offer, get 35% off, and consider signing up for level 4. It's best if you are a member of Schwab and have the Thinkorswim platform. There's still great stuff there for you if you don't, especially our Market Condition Monitor Pro, which he demonstrated. So if you didn't see that, go back and watch Matt's demonstration of this level 4. So please do go to our website, take a look at that, and sign up for 35% off for this 3-month membership. All right, stock market, multiple time frame analysis and projections. I'm going to look at the S&P 500, NASDAQ, and Russell, our proprietary indicators. I think it's just an unusual way to look at the markets the way we do. And you're going to see as I open this up and move over to this chart right over here. This is the chart this is the chart grid that our members get that have the S&P 500, NASDAQ, and Russell in there. And we have weekly, daily, the daily momentum, and intraday 2-hour charts that we look at with our proprietary studies. And I'm going to blow this up and talk about the analysis that I shared a couple of weeks ago, which at the time I said we were in a declining phase and likely to rebound, but I never thought the rebound would get through resistances. The reason for that is because the highest probability is when you threaten, and now it didn't close below this, the 78.6 warning level, that you then have a very low probability of getting back up to the high. And our analysis is probabilistic. Now, I got to really hand it to RV, who said, well, this really looks anomalous, and we didn't close through there. And Matt says, well, you left, the bar came right back up. So this is where that weekly bar closed. They were right, and I was not. And, maybe some important lessons in there about, letting these things develop a little better. But I had us moving up into the 78.6 and then the market turning down again. And these projections were coming down here to the 4,800 level in the S&P 500. Now that this has come up here, now that causes me to raise all the analysis and projections back up to where they were, because this has now disproven my analysis and gives us new data, new messages. And our analysis is flexible. Lots of people watch our analysis for the first time and they think we're moving goalposts, which maybe we are, but that's because we get new data and we always want to show the highest probabilities. Let me be clear, the lowest probabilities sometimes happen. That's why they call them probabilities. So now what we have is a flattening out over here of momentum, but still not in the greatest shape. The minor cycle in here bottomed exactly on the day that I projected weeks before, and then turned up as expected. Again, this rally is very strong. And as the investors pile back in, I said early in the show that I thought the market for short-term traders could go to new highs. And that is something that we have to respect as traders. As investors, we're looking at, 200% market cap to GDP, historic valuations in here, and a volatility condition that happens when markets are not healthy. And I said also in the beginning of the show, I'll be bringing some charts in the future that shows you how this is how markets top. And that's probably what's happening. But topping phases are 4 to 6 months. So we could get a lot of movement on both sides We have to be very open to that possibility. We are now in this minor rising phase right over here with momentum on this weekly chart flattening out. When I switch over to the daily chart, now before I leave that, this period of risk doesn't change. From out over here, September, November is where I think there's a good likelihood of a very strong break to the downside as we move into that election period. Now here is the daily chart. You can see again this huge break right in here. And I talked about a break into the early part of August, and that is exactly what happened right in here. And then this rebound getting through the resistances. And now we're getting this flattening out over here. Now I want you to notice somebody just asked about, using cycle analysis for tops. We actually don't do that. We look at the location. This is kind of midway or a little bit to the right side of the cycle. This is an engulfing pattern. And today it tried to rally and it's kind of stopping in here. And that is the up near these all-time highs. Now I'm going to show you a little bit different when we look at these other indexes. Now, when we look over here, we got a bottom warning right over here, an orange dot that actually disappeared because of it has a built-in volatility part of it, and it was just barely in the extreme oversold category. It came right on time. I'll show you that in the other indexes. And now you could see right over here, these big green dots as the S&P 500 became positive. This is our option bias study. And you can see right over here, or the timing right here, is where it told you bias your option positions to the short side. Now, right over here, when it got through my resistances, it's telling you, well, you have to bias your option positions to the long side. Even though we look for a correction in here, you could see the rally now is getting to the right side, and this translation is likely to bring you a correction over here into the downside in the S&P 500 that is likely to bring it down to somewhere right now, because these are rising, so it might be a higher level of around 54.40. So that would be about 170-point corrective period right in here. Now, there's also a 23% that I don't have in here that could be higher. And the longer this stays up in here, the shallower that correction will be. And then when we get into this rising phase right over here is where I said, short term, we could get to new highs. And that could get you something, looking like this right over here, getting up to those resistances or up to new highs in that next cycle, taking you out into sometime in September. Now, early September is where the VIX is telling us that it's likely to tick up again. And I'll show you that in a moment. So this is a look at the S&P 500. And you can see here, it is turning positive on the option bias indicator, which it did 5 days ago. Now here you could see the momentum conditions, and here they turned negative, as you could see, and then as the market rallied, they went neutral, and then they turned positive again here on August 16th is where that turned positive, and where our algorithms began to get more positive also. So momentum strong here. You can see the slim ribbon PO. This is about to turn up and give you a green arrow, and that would be, an indication that momentum is still strong, and we could resume some upside movement in here in the market before it goes into that corrective period. This is a 2-hour chart, and on the bottom end here is the MCI, the market condition indicator. This is just fabulous, because what this shows you is the 25 and minus 25. When it comes down here through the 25 and doesn't get under the minus 25, it tells you that the longer term indicators are preventing getting a bearish signal. And then when it moves up back over the 25, you get a positive indication. And that happened over here on August 15th, right there, where it gave you that positive signal. And here you could see the slim ribbon and the 2-hour positive. This is the whole period here where the slim ribbon turned positive right there. That was back on August 12th, right there. Here's where it was negative when the market was moving down. So what this really is 2-hour short-term directional decisions. For those of you that are intraday traders or short-term traders, this is really a dominant part of that analysis. When this is moving up, when it's green, then being short is most often going to be wrong. Being long is most often going to be right. And we got this signal back over here on August 12th, quite a number of days ago, really strong as far as that goes. So that is a look at the 2 hour. Now, I see somebody put up a question about sharing the analysis on the 2 hour as far as cycles go. I only have that available for level 4 members. And if you're a level 4 member, I don't know who's asking me that, and you want to see that, then you can send that to me and I'll send you a link for Thinkorswim. That's the way I would share this for a level 4 members, or take advantage of our new level 4 special. So that is a look at the S&P 500. Now you're going to see somewhat of a different story looking at the NASDAQ. The NASDAQ did break that 78.6% level, though it didn't close below it, as my team would tell me. And that influenced me to be more negative. And you can see that here, it's still in the sell zone. So sell zone here between the 50% right there and the 78.6. If you can get a close up here through that repair level, that's the 20,000, 20,000, sorry, exactly at that level. That would vastly improve this. It's a lot of the mega caps, the leaders in tech, they look broken to me, quite a number of them. They've had big rebounds, but the patterns are still not great. And as Katie said earlier in the show, this period out over here is a period where there's a lot of risk in a lot of stocks. And that's why we're looking for this period out into November, starting sometime in September, to be a window of time when the market could move down sharply again. So in this case, we didn't rally as far as we see in the S&P 500. When I look at the daily chart over here, you can see again that engulfing, and that one comes under that 78.6 repair level. But just in case it does get through there, I want to show the next level up over here, which would be testing that high at around 20,700. At that all-time high right over there. So I'm showing this upper track right over here because it is a possibility. But then again, I think the highest probability is that it will waffle around over here and then test this area right around 19,000. And then after that, after it does that, we get into that period where it could do better again out over here. Now, this rally period out over here, or this favorable period, I really see as not getting deep into September because of what I'm seeing in the VIX, and I'll show you that in a moment. Again, this is where the bottom warning came in. This option bias indicator, when it turns orange, it is phenomenally good. And that's where that bottom indicator came in right there. And you can see how fabulous that was. It is still yellow, neutral right over here. It hasn't really been able to improve yet. So here we see momentum here on the daily chart has turned positive. This slim ribbon PO on the bottom about to give you an upside momentum signal as it turns up over that 25. So that would be a positive occurrence and extend out the nature of the rally. Here again is what we saw on the S&P 500 as where the 2 hour chart was telling you if you're a short-term trader, this is the place you could expect to be short. If you're a short-term trader, this is the time frame you could expect to be on the long side. You can see that right over here, and here's where it turned up right there again on August 12th. Short-term traders were really influenced in here to keep their biases on the long side. Nothing to do with what I said or being negative or where resistance was. If you're a short-term trader, these are the things you need to look at, short-term momentum, and really have a strong guide for you on how to manage your positions. Again, we have the positive upturn over here on the market condition indicator on that 2 hour chart. Here you can see on the Russell something different, but actually changing. As today, we have had a very significant change where we have a revival in this index. It was really lagging until just today, getting into this resistance area, but getting up nowhere near where we had the resistance levels, or nowhere near where the S&P 500 had rebounded, but now much stronger as we look at this again. You had that engulfing here on the weekly, but that bottom came right on time. And now you're in this rising phase, getting through this resistance. And I think it's going to easily get through that 78.6 repair level right over there and through that 61.8% extension, and then get up to recovery highs right in here or higher. It seems to me that based on what I'm seeing as action now, that the small caps and mid caps will lead the market to some continued strength in the near term, short term, and get up over here. This right over here, this level is 22.86. This level over here is 23.28, 29. Those are kind of levels that I think we should be looking at here in the Russell, as this is still a positively configured cycle right over here and testing that high, just as the S&P 500 is doing, is now making sense to me as we see this rotational change in the market and a small cap revival. Remember, small caps borrow money because the companies lose money, most of them. And so they have to keep borrowing money. Interest rates go down. It's good for them because their costs drop as far as the cost of money. And that's why money starts to move into the small cap. So we're going to look for continued strength in here as we see this on the weekly. Here you can see on the daily, it's already taking that upward track that we have in there, and that's that level of about 22.30, 22.35. And if it gets through there, if it get through that level, well, then we'll be projecting to that high. Right now, again, it looks to me like there'll be some kind of a pullback in here. But then after that's over with, this move into this early September period right over here really looks to me like the one that could get up and test those highs right there. So that's what we're looking at here. These are positively configured cycles that are likely forming in here. That means wherever this peak is after a correction, that peak is likely to get taken out on the upside. So if you look at that configuration, how positive that is, I'm just going to go back to the S&P 500, and you can see in here that configuration of the cycle is very positive. These all say correct and then get above these highs that we're in right now. And the NASDAQ, the same thing, positively configured cycle, correct, and then move back to the upside. Have had lots of questions about the VIX, so I want to bring the VIX in right now. The VIX chart right here is saying to me that the correction of the upward movement that we're in right now, or the correction in the VIX, has some period to go out into early September. So that would be maybe another, couple of weeks that it could move out over there. When I look at the weekly pattern, and remember, we were talking about this potential upside move in VIX, though in no way would I have been projecting it to get up to 65. There, where this period right over here moves up in September, there could be another big upside spike. That would be right in this time frame right over here, and then probably come down again where this cycle comes down again. So I think that we're going to be in a period of elevated implied volatilities based on this higher volatility that we saw come into the market, and what I think is a long-term top that is starting to form in the stock market, which will take many months and probably have many moves of size in both directions in the stock market. This period right over here, October into November, is that period where I think there is risk of another one of these giant spikes. And that's the period that I'm talking about for the stock market to have that sizable decline here in the S&P 500 out in that October-November period. That's what the VIX looks like. And that is my analysis on the stock market.